What's up, everybody? This is your girl Erica from the Classy Climb blog, coming to you guys today with this show talking about cash out refi. Now, many of you have been hearing me talk about home ownership being this absolute win, this absolute income generator, the foundation of wealth. How did these families make it? It's literally because they um, going to take myself out of the picture there. It's because they have a house. And many people will argue up and down about how they don't have a home or they can't afford a home or the starter home prices. And I want you to understand what happened. People who had homes, I made a comment and I'll stand by it. If you foreclose in this market, you're brain dead. You're brain dead or you're stubborn as a horse. The reason a lot of guys keep saying that wholesaling is dead because majority of people who have homes that are in distress or in a certain condition know they can sell it and still get money for it. But let's say you're a person who doesn't want to sell your home. You don't have to. There, a lot of people have equity. I can tell you right now here in Austin, there's been areas where the homes are 275 and now they're $499,000. So let's say you just could not get a refinance cash out, you could have sold your home and still took that extra all that equity and went and did something with it. Now, this article is marketwatch.com. Again, I know y'all love asking me where's the article links and where can I get the article. I'm literally saying the articles and they're on the screen as I talk. If you cannot, with those context clues, get these articles, I really can't help you. I know y'all been saying I've been a little snazzy, sassy, whatever you want to call me. Um, I just can't read you the article and also spoon feed you the link as well. It's right here. It's usually in the description. If you can't find the description, there's an issue there already. So let's get this started. Look, if you're here, drop your city and state in the comments, uh, and we're gonna go over this. Then this is why, um, if your parents owned a home, there's no reason you had a college loan. There's no reason you're in debt in school. There's no reason for you to leave college with debt or leave college without a car and money for an apartment. I mean, if you just want to be honest, like the real wealth comes from when you have a house and you're able to take equity out of that house. Not to pay off credit cards, not to go on vacations, but actually wealth building activities. And see what happens is we have a whole society now that don't have starter homes and starter homes, like, as far as like families being able to just turn around and sell the starter home and then they actually pay off all their debt, you're further ahead in your retirement than other people. But what I've noticed is people who do that end up usually having to do it again, unfortunately. So, um, let's start with this first article on Market Watch. Homeowners have an estimated $10 trillion in tappable home equity right now. Is now the time for a cash out refi? Now, this article is February 17th, 2022. Now, let's even go here. Let's even go further over some more. People who already been, and this one is housingwire.com. We go in here often for this channel. We'll be on here some more later. Cash out refis actually reached $1.2 trillion in 2021. Highest level since 2005. Now, this is where people are talking about, oh, we're going to have foreclosures. We're going to have all this stuff. And I'm like, no, the average person, even if they were down bad in 2008, even if they were down bad in 2008 from their home, if they just waited 10 years, they made their money back and then some. And that's the problem. A lot of people are jumping into these homes thinking, I'm going to move in 2 to 3 years. Nah, this is a 10-year play. Like, keep this bad boy. Origination volume hit new record of 4.4 trillion in 2021, according to Black Knight. Again, Black Knight data shows that lenders originated $1.2 trillion in cash out refis, up 20% to the previous year that did $1 trillion as well. Okay, cash out refis went from 36% to more than 60% of all refis in the beginning of 2021 fourth quarter. Okay, why is this happening? This is happening because a lot of people are talking about landlords. Oh my God, these landlords are not having tenants who don't pay. It didn't matter if the tenants didn't pay because the landlords were able to do what? Cash out refi on these homes. All right, so even here, 2021 homeowners tapped over $275 billion in equity. In the fourth quarter, more than 1 million homeowners tapped $80 billion. So that's in the fourth quarter alone. Despite the withdrawal, the tappable equity available to the homeowners with the mortgage grew to $446 billion. Okay, so they've been discussing the shift in the equity-centric market for some time. And so right here, you see a lot of the data on the information if you go through here. And so this one's on housingwire.com. We also see where the realdeal.com, they had the cash out mortgage refi hitting a 14-year high. So 54% of all third quarter refis were cash out as borrowers pulled 70 billion from homes. So again, many of you were saying, well, Ericka, what is going to happen to these landlords in all this issue? And honestly, what's going to happen to them is if they're smart, they cash out refied and held, right? And they waited till the moratorium was over. Or what I'm meeting is a lot of people who end up taking that money out of that property and then putting it into other properties or putting it into apartments, putting it into syndication deals that allowed them to have other opportunities. So again, this is the realdeal.com. This is called the New York Real Estate News. Now, why is it called that? I think its kind of focus is New Yorkers looking to invest in other areas, residential, commercial, real estate finance. And so you see its focus are Texas, South Florida, Los Angeles, San Francisco, Chicago. And so you can check this out on your own. Again, this is why, again, when people tell me somebody about foreclosures coming along, that doesn't make sense. The math isn't there for foreclosures because a person could just sell. Even if they didn't want to leave that house, they could literally just sell and save themselves the headache. So again, and then on top of that, if they have tenants or they have parents or they have bills, this is a great time for them to get a cash out refi. Again, cash outs accounted for 54% of all refinances, the highest quarterly rate in 14 years. Again, but homeowners are not partying like 2005. 70 billion represented just 8% of the tappable quarter. So less than 1% of people are even tapping the money, right? Because they saw what happened in 2005. You know, they were kind of spooked again, right? The average credit score of a cash out borrower is 50 points higher than it was in 2005. And again, remember states like Texas, the reason Texas didn't have as much problems as other states is there's laws here that you can't take over 80%. So let's say your house is 120,000 in value. That's very low. Just doing it for the argument. They weren't going to let you take more than 80% of that. So you always had that 20% room for equity. So you couldn't be underwater. And then also too, if you wanted to sell, you still had some wiggle room there. Okay, so again, you can check this out over here at therealdeal.com. The last one is PR in Newswire. Same thing. It's just a recap of what we just talked about at Black Knight. Talks about fourth quarter. Also here too, you have Fox Business, 5 reasons to get a cash out refinance. And now this one's from 2020. Now in December, the reason I would say this came at that time is that's when we started noticing people being the moratorium on eviction started happening. Okay, let's see here. And then this one, that's for another article. But if you guys definitely want to check out Housing Wire, housingwire.com articles will have it in there where you can find this. This is a very common topic, but Black Knight data is pretty solid. Another part in the article, they said that they will likely be 20 to 25% lower than the 2020 level, suggesting a 7% decline. And they were wrong. More people cashed out refied. So again, I think a lot of places, the longer the moratorium went on, the more likely this person was to take a cash out refi to kind of keep the home so they didn't lose the asset. But you guys can, I hope you guys can see these articles here, and then you can actually review them in your own personal time. What are some of your thoughts? Are you guys seeing your friends or family or neighbors do cash out refi? Are you seeing interest in it? Do you even know what a cash out refi is in the chat? Please put that in the comment section, because if not, then we need to do a whole nother conversation, because this is a part 1 of a 4 series. So I hope you guys understand the setup here, that a lot of folks dug in deep. They weren't going to lose their home. They weren't going to lose their rentals. So this is your girl Ericka from the Classy Climb blog. I hope this, guys, was a really good information for you and it was helpful.
Do you want to learn how to buy tax liens for less than $1,000 and get that immediate ROI return on your money? come on over, hop into the free training. Listen, my name is Ericka Williams, author of the Classy Climb blog. I'm a 6-figure YouTuber, got $2 million in portfolio that I manage. But listen, I'm gonna show you how you can get in to tax liens, sometimes for $400, $500, $1,000. Several of my students have immediately turned around and sold their properties, sold their vacant lots, and gotten their money 10x return. Look, don't take my word on it. Come on over, hop into the free training. No cost to you. Show you students, testimonials. Listen, I want you to get ahead this year, whether you work with me or not. But a lot of you are asking, how can I build my real estate portfolio? How can I make more money? How can I grow? But I only got a little bit of dough. Hey, let's get cracking. Let's work together. Hop into the free training and let me show you. This is your girl Ericka. Later.